Hi, Warren William here from Smartest Data. So we're mid-first week in January, school's back, and the equity markets seem to be doing quite well. So in this video, what are we going to cover? We're going to cover economics, general overview of stocks, and don't forget also later in this week, with the earnings season starting off with banks and Delta, this is a key week for stocks. Okay, so let's go to the video. Economics, specifically inflation and the expectation of the Fed's next move and any possible hints of a policy pivot, this will all take centre stage this week with the release of the December CPI report. Headline CPI for December is expected to be 6.7%, down from 7.1% in November and down from the peak of 9.1% in around about September. Okay, so market participants will be keenly watching to see if the CPI report in any way changes the consensus view that the Federal Reserve will raise interest rates by 50 basis points in February and another 25 basis points in March before pivoting and remaining on hold at a terminal rate of 5.0 to 5.25%. Let's go over to stocks. Okay, as mentioned in the opening, so far this year, stocks have done quite well. So let's go over to my homepage on FinScreener to take a look at the way I've got things set up. Okay, so here we are in FinScreener. It's a great tool, so do take a look. How have I got this organized? So if we look up the top here, you can see that the technical overview, I've got indices at this point in time. Then over to top gainers and top losers. This is on the S&P, this is on the Nasdaq, sorry, so I can change that to the S&P 500. Then down to the most active with the Nasdaq, can change that to the S&P. Heat map will come to in a minute. Strong technical analysis on commodities, earnings calendar, and best dividend stocks. Okay, so let's go over to the heat map. Okay, so here we are in the heat map, and as you can see, this gives an indication of how the stocks in their respective sectors have performed over the past week. So Apple up around about 3.5%, Google basically flat, Amazon up around about 5.6%, and the financial services with JP Morgan up, Bank of America basically flat. So the key sectors to focus on this point in time, I think, technology, financial services, because banks are announcing later this week, and also the energy sector. And as we can see there, ExxonMobil up around 3% over the past week. So that's performed quite well. Okay, so the earnings season officially begins on Friday with the banks dominating. Also, there is the expectation of earnings pre-announcements and guidance updates from other sectors. So it's going to be a very busy week. So the major US banks will kick off the earnings seasons on Friday. The key indicators of the bank sector will be the consumer credit cycle, a re-steepening of the Treasury yield curve, quantitative tightening, and a recession or soft landing in the US economy. Okay, so what do you have to pay attention to for investors in the bank sector? Consumer credit trends are expected to moderate, credit card delinquencies, what's going to happen there, and also the level of bad loan provisions and the mortgage industry in general as interest rates rise. Okay, investment banking actually is expected to be down 60% year on year, and for trading, it could be up around about 10%. Remember, the banking sector, along with tech, are very early cycle sectors. Keep in mind this graph. So where are we at this point in time? We're in this section here. So we can see the banks, tech, and consumer cyclicals will start to take off even before the economy takes off. In fact, the economy is still possibly moving into a recession, as you can see here. So the bull market starts to take off, tech, banks, and consumer cyclicals, then following on from mining and industrials. So where are we at this point in time? We're around about here. As the equity market is starting to take off, remember, the equity market will absolutely anticipate any downturn in the economy by a good 12 months or so. So on to retailers. The ICR conference is being held in Miami. It concludes today. So there's an opportunity for companies to pre-announce and give guidance on the potential earnings. One key thing is to see the central theme is the benefits of cleaning out the inventory versus the cost of pricing power to move stock. The conference could result in some significant earnings pre-announcements and guidance updates, with the overall expectation being respectable but not spectacular sales growth over the holiday season. Okay, so a couple of the key companies. Lunamon announced on Monday was down 9% as it missed, whilst Boots Barnes stock was up 10% on the announcement from yesterday. American Eagle Outfitters announced and they're at the upper end of expectations. So other stocks to watch are Urban Outfitters, Macy's, Five Below, On Holding, Planet Fitness. Keep in mind, retailers' consumer discretionary typically run later in the equity cycle. So as I mentioned, later on this week, quarterly results are set to kick off. United Health Group, JP Morgan Chase, Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of New York, PNC Financial Services, and Delta Airlines, as well as Wells Fargo. So it's a big week for earnings announcements. So just on to earnings guidance. I'm going to keep the next couple of pages up on screen for a couple of seconds or so. So companies which have been above has been about 11, in line around 10 companies, and below about 9 companies. So look, it's just a random snapshot. Healthcare has been a bit of a concern. So really it's a mixed bag. Look, I'm going to keep these up on screen for a couple of seconds. So by all means, take a look. Okay, so in December I posted 2 videos on YouTube, one being the top 10 analyst picks for 2023. This was run by CNBC and mainly focused on the big cap stocks. The other entitled The Dogs of the Dow. So let's go over to FinScreener again. I did put into FinScreener 2 portfolio. Okay, so here we are in the portfolio for the top 10 stock picks. So let's take a look at the picks. Amazon, Bank of America, Caterpillar, Google, Nvidia, Qualcomm, Raytheon, Verizon, Wells Fargo, and ExxonMobil. So I took the liberty of making 3 changes to the stocks that actually appeared on the video. I took out Tesla, I took out Comcast, and the other one I took out was Boeing. I didn't have really faith in these stocks to be in the top 10. So let's go over to take a look at the... Okay, so here we are in FinScreener and the portfolio part for the top 10 stock picks. So far, the portfolio from the 3rd of January is up 2.5%. Look, it's in line with the markets, give or take. Okay, so you can work on analyst ratings. Most of the stocks in this, the analysts have got as a moderate sell or a strong sell. But then on an earnings rating, the top buys are Wells Fargo, Amazon, Google, Nvidia, and Qualcomm. So on a buy is Bank of America and Verizon. So there we go. So if we look at just the diversification of the portfolio, we can look at, so here we've got industrials at 20%, financial services at 20%, technology at 20%, and communication services at 20%. Then on to energy, 10%, and consumer cyclical. So what I simply did here was take a broad portfolio, invested a fake 1 million. So I did not invest in any of these stocks. This is a pro forma portfolio. Anyway, so far so good. It's doing quite well, just to measure the analyst picks. So what will I do during the year? I will change some of the weightings in this as stocks perform and outperform, and there's valuation. Okay, so here we are in Dogs of the Dow, the portfolio which I set up in FinScreener. So here are the stocks, the allocation: Amgen, Cisco, Chevron, Dow, IBM, Intel, JP Morgan, 3M, Verizon, and Walgreens. Okay, so the idea here is to invest in the top 10 dividend paying stocks at the end of the year and leave them to run for the rest of the financial year. Okay, so with this portfolio, I'm going to do no allocations, no change in allocations, unlike the top 10 stock picks where I will reallocate from time to time. This I'm going to set and leave run. Okay, so let's go over to the allocation part. Okay, so here we are over in the allocation part. As you can see here, so far the portfolio has done 3.5%, so not so bad opening up the year. It outperformed the NASDAQ, the S&P 500, so on and so forth. Okay, so let's take a look. Again, on the moderate sell, you can see the analysts have basically got around about 5 stocks on a moderate sell. So there we go, Chevron, IBM, JP Morgan, Verizon, and Cisco. Okay, just on the hold, we've got Dow, 3M, Amgen, Intel, and Walgreens. So on the earnings rating on a strong buy, we've got Dow and Intel up there. On a buy, we've got Chevron, IBM, 3M, Verizon, and Walgreens. Okay, so let's take a look at the allocation. 30% here is in the tech sector, 10% is basic materials, 10% is in energy, 20% is in healthcare, 10% in communication services, 10% in industrials, and 10% in financial services. So as I said, for this portfolio, I will stay static over the year and just see how it goes. Look, so far year to date it's doing 3.5%, so not so bad. Let's see how it goes. Okay, so I do these videos on a weekly basis, so if you like them, like, subscribe to the channel and hit the bell to be notified when they're coming out. And also don't forget, the quick definition videos are out there. They're for your education. There's about 170 of them so far. I'll keep working on them. Anyway, see you in the next video. Let's keep an eye on the bank stocks for later this week.